Puppy Trades! I want to do a video analysis update of the stock market. We'll talk about the Nasdaq QQQ, as well as the S&P, Microsoft and Apple, Nvidia and AMD, Tesla, Delta Airlines and Dave & Buster's, Boeing, Pfizer and AstraZeneca, SIL, Amazon and Netflix, Facebook, Enphase Energy and Neo, Xpeng, Wayfair, Shopify, Palantir, Datadog, Tattooed Chef, Beyond Meat, Bitcoin, Ethereum, and Marathon Patent Group. So let's get right into it. This is a wave 1 and a wave 2 on the Qs and a big wave 3 subdivided into 1, 2, 3, 4, 5 waves. And I think this is a wave 4 correction. I think this is the wave 4 correction that ended with a beautiful weekly hammer candle at the 50% retracement. So if we're above 316, this is the wave 4. The length of wave 1 placed at the wave 4 low says, believe it or not, the minimum expectation for the Qs is that it goes on a wave 5 up to the 450s. Now, what if when we go make a new high, right? Let's say we do get up to the 410s, the 420s, right? And we have our eyes on the weekly RSI. If the weekly RSI breaks this high of about 77, then there's a rule in Elliott wave theory that says a wave 5 must end with momentum divergence. So if when we rally in the future, the weekly RSI breaks above 77, this could end up being a 1-2-1-2 Elliott wave nest. Now, I think the S&P supports the more conservative wave 5 view. I also think that XLK and Microsoft support the more conservative wave 5 view. But I posted about the DAX last night, this 1-2-1-2 Elliott wave nest idea. So we're going to know for sure what the answer is based on whether or not the Nasdaq breaks above 77 on the weekly RSI. Anyway, that's down the road, right? We don't really need to talk about that right now. It's just something to have in the back of our minds that it might psychologically fit in with the idea that, you know, maybe this is a bear trap, right? And it also kind of seasonally fits in with the idea. So here are the past 20 years of seasonality for the S&P, including all years, right? Including all years for the past 20 years. We get really bearish at the end of January, check. We get really bearish at the end of February, check. And then almost all of the S&P's 9% gains come after March, right? So basically, everyone becomes an expert in, you know, geopolitics, right? And then all of a sudden, they become experts in monetary policy. So that's seasonally. Now, I know what you're thinking, puppy trades, it's a midterm year. Okay, I got that too. Midterm seasonality, specifically for the second year of a new Democratic president, which is where we are. We have a dip in February, check. Then we have a rally afterwards. So in this scenario, we actually sell in May and go away. In this scenario, we don't. So we'll talk about which one might be more likely, but just in the short term, we don't really care, right? I think that's what's most important is to just get the downside levels and look for evidence to the upside. This is a wave 1 and a wave 2. This is a wave 3. And it's a wave 4 that retested the wave 1 high. So the length of wave 1 placed at the wave 4 low. If we're above 316, can take the Qs to the 450s. But we did end that correction at the 61.8% fib, right? And a lot of times when a correction ends at the 61.8% fib, it's not a wave 4, it's another wave 1 and another wave 2. Let's talk about the S&P. I think the S&P supports the more conservative view. This is a 1, 2, 3, 4, 5 wave 1 and a wave 2. This is a wave 3 that went past the 161.8% extension. And this is a wave 4 that ended with a beautiful weekly hammer candle at the 38.2% fib. So wave 4 retest the wave 1 high. The length of wave 1 placed at the wave 4 low can take the S&P up to the 550s. Now, I want to kind of see if there's anyone who pointed out these momentum divergences, right? For the past 2 years, they've been drawing momentum divergences on the RSI as evidence that we should be shorting the market. I wonder if any of those people are going to come and point out this momentum divergence, right? This glaring momentum divergence on the daily RSI where we make a lower low and a higher high. They're probably not going to point that out, right? We all see what we want to see. I think we'll hold above 400 go. The length of wave 1 placed at the wave 4 low all the way up to the 550s, right? And then that psychologically would make a lot of sense that we got everyone off the bus. Here's XLK. I think XLK with Microsoft supports the more conservative wave 5 view. This is a wave 1 and a wave 2. This is a 1, 2, 3, 4, 5 wave 3 that makes a new high on the weekly RSI. So that supported the idea that this is not a major wave 5 that ended. It's likely either another wave 1 and another wave 2, or it's a wave 3 and a wave 4. The length of wave 1 placed at the wave 4 low gives a minimum target of about 200 for XLK. A tighter stop would be 141. A wider stop would be 135. That's a nice zone to stay above. And I think that we'll see XLK, which is basically 40% Microsoft and Apple, go to 200. Here's Microsoft. Microsoft is a beautiful chart. Wave 1, Wave 2, Wave 3 that makes a new high on the weekly RSI within the same cycle from the March 2020 low. So that means this probably is not a large degree Wave 5 that ended. I don't think it is. I think it's a Wave 3 and a Wave 4. Beautiful wick at the 50% fib. The length of wave 1 placed at the wave 4 low says the next minimum wave 5 target is about 374, call it 375. If we go past that significantly, it could be the length of wave 3 placed at the wave 4 low for that wave 5 target. More than likely, what we'll hopefully see is a wave 1 and a wave 2 develop, and then we'll be able to measure kind of the targets for wave 5 based on these smaller degrees. Anyway, here's Apple. Apple's a pretty one. Wave 1 and wave 2 just from this low that's formed. This low that's formed in September, that quad witching date, by the way, wave 1, wave 2. I think this is a wave 3 in progress. I think that this is another wave 1 and another wave 2. And yes, this is another wave 1 and another wave 2. So I know it sounds like I'm saying 1, 2, 1, 2, 1, 2, right? But all that really matters is that just within the cycle from the May 10th low, we form a wave 1 and a wave 2 and a wave 3 that goes past the 161.8% extension of wave 1. This is a wave 4 that ends at the 61.8% fib. So what happens when a wave 4 ends at the 61.8% fib? Well, there's the possibility that it's another wave 1 and another wave 2. Anyway, we don't really need to talk about that possibility right now. Higher beta stocks sometimes can have deeper wave 4s. So anyway, all that really matters for Apple is that we can hold above this low of about 152, go the length of wave 3, place at the wave 4 low, and that gives a wave 5 target of about 197. If we go past the 197, we could see a more kind of bullish possibility open up. You know, a lot of traders, they don't like the idea that we're trading against lows, but I do think right now the best low for Apple is 152. I think that XLK above 141 to 135 is a great level for Apple, and I think the Qs above 316 is a great level for Apple as well. So that's Apple. Here is Nvidia. Nvidia didn't go below any of these levels, and just a quick kind of note, I've been saying this for a long time, but just in case anyone's new, I trade the bar chart, weekly and daily candles, and it only really counts what happens during the market session, okay? It only counts what happens during the market session. I don't trade pre-market. I don't trade the futures. That's not because there's anything wrong with doing either of those things, but, you know, you do kind of have to decide what your analysis is based on. My analysis is based on the daily and weekly candles that form during the trading session, and Nvidia did not break below this low of 208. I think that this is a wave 1 and a wave 2. I think the more conservative view, which is starting to become the silly view, is that this is a large wave 3 in progress. This is the wave 1 of wave 3 and wave 2 of wave 3. This is wave 3 of wave 3, and this dramatic ABC correction was a deep wave 4. So the length of wave 3 placed at the wave 4 low can take Nvidia up to the 350s. I think very likely it would go a lot further than 357, and we'd be talking about a more bullish possibility. One more bullish possibility is that it looks something like this, where this is wave 1 and wave 2, this is wave 3 and wave 4, so we're then a pretty big wave 5 that would be the length of this whole rally placed at this low. I think AMD supports the more aggressive view. I think Tesla supports the more aggressive view, but right now we don't really need to make that argument. I think that Nvidia's done a great job giving these levels to bulls. 195 continues to be a little wider, but I still like, we didn't break below 208, so we're above 208 to 195. Nvidia is a great chart that says, hey, we shouldn't really be calling tops or doing anything like that until the 350s. Very likely we go past the 350s, and I think that AMD supports that idea. I talk about Micron a lot. There's a lot to talk about in this video, so I'm just going to talk about AMD and Nvidia for the semis, but it's important to remember that two kind of clean energy stocks, and really a lot of clean energy stocks that we will talk about in this video, Enphase Energy and Tesla, they have a lot of overlap in the semiconductor sector. So anyway, if we look at AMD, I think this is a 1, 2, 3, 4, 5, a big wave 1 that formed from this low, and this is about 7 months, right? So we'll talk about Datadog 2, we'll talk about Tesla, 7-month rally from mid-May to late November for all three of them, right? So that gives a time target of 7 months if we enter a wave 3. I think AMD and Tesla really support the idea we're going to enter a wave 3. The length of wave 1 placed the wave too low. Says the reason AMD is doing all these buybacks is because they know the minimum wave 3 target is 190 before a shallow wave 4 and a wave 5 higher. So don't blindly trade the buybacks, right? Because Intel's been doing buybacks for the past, year and a half. But anyway, I do think they're buying for a good reason. This is a 1, 2, 3, 4, 5 wave 1 and a wave 2 that says we shouldn't bet on Lisa Su if we are above 99. A little wider would be 92. The length of wave 1 placed the wave too low. can take AMD to 191 before a shallow wave 4 and a wave 5 higher. That can happen in 5 to 7 months. That lines up with Tesla. So I'm including Tesla in the evidence category. Man, this is a pretty chart. I think the larger degree views that this is a 1, 2, 3, 4, 5, a big wave 1 and a wave 2. And this is another wave 1 and another wave 2. So for those of you who like statistics, this massive rally in Tesla was preceded by lots of readings on the bar chart, straddle and strangle screener. This massive rally in Tesla was preceded by lots of readings on the bar chart, straddle and strangle screener. And I think this rally is also preceded by readings on the bar chart, straddle and strangle screener. So why do we use that? Well, it filters for 100 options volume per contract. That's the biggest reason. And we've kind of proven with stock after stock that, you know, we shouldn't pray to the bar chart, straddle and strangle screener. We shouldn't pray to iVolatility.com's low implied volatility and top 200 volume and open interest screener. But that gives a great list of stocks that institutions are accumulating very aggressively options on, right? So it doesn't guarantee that the move is going to be to the upside, but they are playing a move. They're not buying all these options because they think it's going to, you know, go into a triangle for a little bit. I think that this is a wave 1 and an ABC wave 2. At the 61.8 to 78.6% fib, I think we're above 690. So the length of wave 1 and place of the wave 2 low says Tesla's going to 1400. NIO's probably not going to crash during that time. The market's probably not going to crash during that time. And more importantly, a lot of clean energy stocks are going to do well. So we had a little bit of a unicorn headline come out this week. And I don't really mean, you know, this is a hard video for me to make because there is like a you know, very horrible things going on, right? But this is kind of a time where it does remind me of what happened in 2020, where we had a little bit of a unicorn fundamental event. We had something that we hadn't really seen at least a long time. And so if we look at Delta Airlines right now, I think this is a wave 1 and a wave 2. I think that this is another wave 1 and another wave 2. So we're at the 61.8% retracement. The length of wave 1 placed at the wave 2 low says Delta Airlines can go to 60. So what I'm trying to say with kind of like what's going on in the news is that it's very kind of different, right? It's very kind of dramatic. And what we have in the end of this video is we have a lot of stocks that are considered unicorns, right? You know, and that's kind of been the knock on these stocks for a while. You know, Palantir is a unicorn, right? Zoom's a unicorn. All these different stocks are unicorns. And it's really a tough job for traders because now we have to go say, okay, which one of these stocks are going to benefit from a humanitarian crisis, right? That's difficult to do. It sounds messed up. But I think that what I'm trying to say is that we have unicorn stocks that could be an opportunity. And now we kind of have a unicorn fundamental event. It kind of reminds me a little bit of what happened in March of 2020. And now we're seeing kind of some of these setups in the growth sector. And we saw Enphase Energy, we saw uranium fuels, we saw some of these clean energy stocks. They're reacting to the energy crisis idea, right? And I think that while it's horrible to think about stocks, you know, when stuff like this is going on, it's, you know, something that investors simply just have to do, right? It's a new fundamental event that maybe could see a new atmosphere in the stock market. So we have a new quarter coming up. We have a lot of, you know, things that could be contributing to a rotation. I think some of these stocks that get rotated into are going to be the laggards from 2021. I think Delta Airlines is going to be one of them. This is a wave 1 and a wave 2. And what I'm going to point out in a second is that this high from March 15th and this low from November 29th on the weekly chart are the exact same highs that Dave & Buster's makes. And it's basically the exact same chart pattern. And what I could see happening in the future is that we go break above this wave 1 high. The length of wave 1 placed at the wave 2 low says, I think what could happen is that Dave & Buster's breaks above this weekly high before the airlines do. And Dave & Buster's can act as a leading indicator because it forms these exact same highs and lows on the weekly chart. The length of wave 1 placed at the wave 2 low says Delta Airlines can go to 60. And I think that what's going to happen is it'll hold 33, that's getting a little wide, but it'll hold 33, and it's going to go break that March high from 2021. I think it's going to follow Dave & Buster's. It looks like Dave & Buster's could be the first reopening stock that really looks identical to most of the airlines. It forms a wave 1 and a wave 2. I think more conservatively, this is a big wave 3, and a wave 4 that ends at the 50% fib. The length of wave 1 placed at the wave 2 low can take Dave & Buster's to 70. You know, it sounds crazy talking about Dave & Buster's going to 70, but I think the best thing for DNB right now is that if we go break this high that was formed on March 15th, it's the exact same high that a lot of the airlines form, right? So what I'm saying is that Dave & Buster's could act as a leading indicator in the reopening sector, you know, sooner than a lot of the other airlines. If it's above 51, then we'll be looking at all the airlines that didn't or haven't broken the March high on the weekly chart from 2021 yet. So I think Dave & Buster's could be a leading indicator. 1, 2, 3, 4, 5 waves. The length of wave 3 placed at the wave 4 low can take DNB up to 70. So here is Boeing, right? I mean, it's hard, right? Because, you know, this stuff is happening, and we look at Boeing and Pounder and say, oh, they're defense stocks, right? It's messed up, you know? But anyway, this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2 at the 61.8% fib. I think we could see Boeing enter a large wave 3 to 363 before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low says Boeing can go up to the 430s to end this big wave 3 before a shallow wave 4 and a wave 5 higher. So I think Boeing is ending a wave 2 at the 61.8% fib. And we're going to go on a wave 3 higher to 363 before a shallow wave 4 and a wave 5 higher. So Lockheed Martin, I haven't really talked about Lockheed Martin. I wasn't really planning on doing it, but it's getting very close. It's getting very close to breaking this high that was formed in June. So I think Lockheed Martin could be a very nice leading indicator for Boeing. If it goes and breaks above this high that was formed, then it could prove from an LA wave perspective that it's within a wave 3. And while that's great for Lockheed Martin, it's going to be a huge leading indicator that if Lockheed Martin has entered a new bullish cycle and it's got, you know, another high to what'll be the length of this rally placed at this low, and then it'll have a shallow wave 4 and a wave 5 higher, then Boeing has a lot of upside too, right? So for Lockheed Martin, it's probably not good to chase Lockheed Martin, but I think it could be acting as a leading indicator that it goes and breaks above 417. And then the length of wave 1 placed at the wave 2 low says the next target is 469 before a shallow wave 4 and a wave 5 higher. And basically, if Lockheed Martin's doing all that, right, and then the wave 5 target is the length of wave 1 placed at the wave 4 low. If wave 4 retests the wave 1 high, right, Lockheed Martin can be going into the 560s in the longer term cycles. So breaking above this high, breaking above this high of about 417 could be a leading indicator for Boeing. So that's Boeing. Here is Pfizer. We'll talk about Pfizer and AstraZeneca. I'm loving these charts. I love these two. In the healthcare sector, I think this is a wave 1 and a wave 2. I think this is a 1, 2, 3, 4, 5 waves impulse in progress. And believe it or not, I do believe this is the more conservative view. The reason I think this is the more conservative view is because this is the wave 3 and a wave 4 that ends at the 78.6% fib. The length of wave 3 placed at the wave 4 low can take Pfizer up to 66. And Pfizer, honestly, is probably going to go past 66 if this happens, because this probably isn't accurate. What could very well be more accurate is that this is a wave 3 of wave 3 that's about to occur. And the reason that we have evidence for this is that this correction goes all the way down to the 78.6% fib. So normally wave 4 is a triangle. It's sideways. It's boring, right? The more dramatic corrections that go down to the 61.8 to 78.6% fib, a lot of times it's wave 3 of wave 3. The length of wave 3 placed at the wave 4 low, or the length of wave 1 placed at the wave 2 low, says that the minimum target is the same. It's 66. Right now, 41's a little wide, but I think that it's a good level to stay above, and there's still a lot of nice risk reward. The length of this rally placed at this low, really in any count, says Pfizer is going to 66. And if it goes past 66, we'll know that wave 5 is a too conservative view. AstraZeneca is looking pretty. I think AstraZeneca could go break this high of 64 and this high of 64 very quickly and be a great indicator for a lot of healthcare stocks, but really it'd be great evidence for AstraZeneca itself. Nice dividend payer. This is a wave 1 and a wave 2. This is another wave 1 and another wave 2 that ended at the 50 to 61.8% fib. So the length of wave 1 placed at the wave 2 low says AZN is going to 71 before a shallow wave 4 and a wave 5 higher. Those 5 waves, waves 1, 2, 3, 4, and 5, you know, the wave 5 target will be the length of wave 1 placed at the wave 4 low. That could take AZN to 82. I think 82 is where this big black wave 3 would end within the cycle from the March low. This is wave 1 and wave 2. So this is another wave 1 and wave 2 of a larger degree wave 3. Waves 1, 2, 3, 4, and 5 would end at 82, and that would end wave 3 in the larger degree before shallow wave 4 and a wave 5 higher. So just to recap, just to make sure it's clear, I think the most important count for AstraZeneca is just within the cycle from the March 2021 low on the weekly chart. This is a wave 1 and a wave 2 that ended at the 50% fib. It's within a wave 3 to 71 before a shallow wave 4 and a wave 5 higher. If wave 5 is the length of wave 1 placed at the wave 4 low, then AZN can go up to 82. So that is AstraZeneca. Here is SIL, the global silver mining ETF. The global silver mining ETF is very pretty, right? And I think that some people, they really just want to decide, hey, is the market going to go up? I'll be in stocks. If it goes down, I'll be in gold and silver. I really like to be in both personally. So I am in both. I was happy to see that at some nights when the futures were, down, gold and silver were up. So that was the benefit. That's the big thesis, right, of investing in precious metals, is that it has a little lower correlation to the market. So there's a little bit of diversification there. They're also all kind of value stocks. They've also all seen a lot of options activity, not only on the bar chart channel screener, but on iVolatility.com's advanced ranker sample. They've been in the top 200. They've been in the top 200 volume and open interest while having close to 0% implied volatility. That means the institutions are probably loading up a lot of options on SLV and AG, and they're probably doing that because they think that there's going to be a large move. I believe the large move is going to be to the upside. So SIL is a beautiful roadmap. I think this is a wave 1 and wave 2. This is another wave 1. We ended wave 2 at the 50% fib, above 30. The length of wave 1 placed at the wave 2 low says we're going to the median of the pitchfork to 68 to 75 before a shallow wave 4 and a wave 5 higher. Here's Amazon. We'll talk about some growth. I think it's important to realize that the growth stocks have large cap leadership, right? We're not just betting against Fastly anymore. We're not just betting against Palantir. Now we're betting against the big boys, right? We're betting against Netflix. We're betting against Facebook. We're betting against Amazon, right? And that's probably not a good idea. I think this is a wave 1 and a wave 2. This is a wave 3 and a wave 4, right? So we had Etsy explode. We had Square Cash do pretty well, right? We can't really react to earnings, but I do think that if the e-commerce stocks start to take off, and they kind of are, right? One day isn't a trend. Maybe we'll see a reversal in this sector. We're going to know for sure if Amazon holds above 2,700, that ONLN and the e-commerce ETF, they could be in a new bullish cycle. The more conservative view is that this is a wave 1 and a wave 2. This is a wave 3 and a wave 4. So we'll hold above about 2,700. The length of wave 3 placed at the wave 4 low can take Amazon to 4,860 before if that's the top, that's a wave 5. I don't think that's going to be the top. I think what's more likely going to be the case is that this is a 1, 2, 3, 4, 5 waves impulse that is all a wave 1 since 2018. We're ending a wave 2. And we're going to go much higher than 4,800. We don't really need to make that argument right now. All we really care about is that if Amazon's above 2,700, right, we can't really, be calling for the market to crash, in my opinion. So that's Amazon. I think it's a great indicator that ONLN, and maybe some of these pops that we've seen from Square, from Etsy, they might have, more legs than we think. So here is Netflix. Netflix is a very pretty chart. I talk a lot about how Netflix and Disney are great evidence for Roku. I think this is a 1, 2, 3, 4, 5, a big wave 1 and an ABC wave 2 between the 61.8 and 78.6% fib. So I love the idea of Netflix being above 331. If that's the case, this is a clear 5 waves impulse. From this cycle, from the 2018 low, we make a new high on the RSI. That means this is not a massive wave 5 that ended. And I don't think it is. I think it's a massive wave 1 that ended. We ended wave 2. We'll hold above 331 and go to 818 before a shallow wave 4 and a wave 5 higher. Here's Facebook. Facebook is a very pretty reason to not bet against software. I talk about Snapchat a lot. I talk about Twitter a lot, right? But this is also kind of a big tech blue chip. And it really kind of, with Tesla, right, with AMD, it maybe supports the more bullish possibility than SPY being within a wave 5. So I think this is a wave 1 and a wave 2. This is another wave 1 and another wave 2. So, a lot of people think it's, BS to say, hey, a deeper correction is a good thing, right? That's just some furu nonsense. But in Elliott wave theory, this deeper correction means that this is not a wave 4 that ended, right? Let's say Facebook's wave 4 ended at 289. Well, then we wouldn't really be looking for a crazy rally. We'd be looking for a marginal new high that would be the length of wave 1 placed at the wave 4 low, right? But Facebook going all the way down to the 61.8% fib, right? A devastating correction that even people who don't, trade in the stock market are talking about. It maybe supports the idea that that's not a wave 4. It's another wave 1 and another wave 2. The length of wave 1 placed at the wave 2 low can take Facebook to 190. So right now it can only be played tight of 190. The best ones, they make you play tight, but I don't think it goes below 190. If it did, then yeah, 137 would be the next invalidation. But I really think this is a wave 1 and a wave 2. Hopefully Facebook will get a little further from 190, give us a little breathing room, but I think it's going to the 430s, the 440s, and that to me is just a minimum wave 3 target with a shallow wave 4 and a wave 5 higher. And there's a whole lot of social media stocks, a whole lot of software stocks, a whole lot of metaverse stocks, right? And that's a real sector. Don't sleep on the metaverse, that are going to be doing quite well. They want us to think the metaverse is dumb, right? They always give the best opportunities stupid names like Roku, like Bitcoin, like the metaverse, but that's just so you think they're a scam. I don't think the metaverse is a scam. I think that's a reality. Unity Software certainly supports that. And by the way, a lot of the metaverse ETF holdings are big tech blue chips, but I think that this is a 1, 2, 3, 4, 5 wave 1 for Enphase Energy and an ABC wave 2. And then it formed another wave 1 and another wave 2 had a very swift reversal. There could be a wave 3 of wave 3 in progress. So it's hard to talk about, energy crises being good for my ICLN position, right? It's pretty messed up, but I do think we're going to see a new kind of set of leaders in the stock market. I think a lot of them are going to be the beaten down growth stocks of 2021. I think Enphase Energy, I posted about uranium fuels, I posted about TAN. We also have a new quarter coming up. We have the March quad witching date, and what we could see in the future is that all this blood that we've seen for the past 2 months has been a massive rotation into 2021 laggards. And I think a lot of the stocks that we're going to see emerge as leaders in the spring, in the summer, are going to be in the growth sector, specifically in that clean energy sector. This is going to be a wave 1 and a wave 2. The length of wave 1 places the wave 2 low, says that a new quarter, a new fundamental picture is going to bring new leaders, and that's going to be great for Enphase Energy. The length of wave 1 places the wave 2 low, says 285 is next before a shallow wave 4 and a wave 5 higher. Here is NIO. So I'm in the Chinese growth stocks. I'm in, some of the ones, right? I've been called a bag holder. I'm not really afraid of being called a bag holder, but I'll just tell you where I think NIO is. I think that where NIO is right now is where a lot of you guys are a little too young to remember, but it's where Tesla was a long time ago, right? People who've been around this channel for a while, maybe they remember these days, right? I think this is where NIO is right now. I really do, right? And I could be wrong about that, but they make retail traders feel like idiots for the best growth stocks. I can prove that when we talk about Wayfair in a second, Amazon, Netflix, right? Every stock that's ever been a big winner was a risky gamble, and I think that right now, I think NIO is right here on Tesla's chart. I really do. And I think that one day it's going to be above this high, and this is going to be the result, right? A bull market that we're still talking about to this day, a bull market that's still probably pretty young, but they all start out as risky gambles. I think NIO is right here. I really do. I could be wrong about that. So I manage risk with growth stocks up front. Okay, I don't stop out of growth stocks because I know they make them difficult. I cut the losers up front by taking smaller positions in stocks that have higher betas. And I think that NIO is a great example of that. I think this is a wave 1 and a wave 2. I'm in Chinese growth for a long time, not a good time, but we're at the 61.8 to 78.6% fib. I want to see NIO above 15. If we got below 15, I think that it would be, oh no, bag holder, explode. That's just what I think it would be. But I think this is an ABC correction, right? All the wave theorists who said, hey, puppy trades are too early, right? There's going to be an ABC correction. You need to wait till 24. The length of wave A places the wave B high is where the wave C correction is going to end. Are they coming out and saying, hey, we reached 20, load up NIO? No, they're not saying that. They're not going to, okay? But I think this is a wave 1 and a wave 2. Maybe it goes below 15. If it did, I'm going to keep holding Chinese EV, but I don't think it will. I think this is a wave 1 and a wave 2. I think NIO one day will be above 66, and we'll realize in the future that NIO above 66 is the same thing as Tesla above this high of 193. And of course, it wasn't 193 back then because Tesla had a stock split. So that's just something to think about. That's just something I'm thinking about. I think XPEV is a great chart for NIO. If it had to be tight, right? If it had to be tight, Chinese EV like XPEV and Lee really support the idea that this is a big opportunity, right? I could talk about FXI, I could talk about the emerging markets and bore you to tears. I think that XPEV is a great example of just why I'm giving some of these Chinese stocks a little bit of leeway, you know, just taking smaller positions and holding them. I think this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2 between the 61.8 and 78.6% fib. I think we're going to go on a wave 3 up to 77 before a shallow wave 4 and a wave 5 higher, right? Having to stop, you know, $4 or $5 below the current price on, you know, something that moves as much as Litecoin, right? That's probably not a good idea. But I'm in Xpeng. I'm in, you know, a lot of these Chinese growth stocks because I know they're going to be difficult. And yeah, sometimes they break this IPO low, right? Sometimes they break the IPO low and it's not the end of the world, right? I remember when NEO broke the IPO low, you know, everyone was called a dumb gambler for getting in at 2 or 3, you know, but anyway, sometimes stocks break the IPO low. We'll talk about that with Beyond Meat, but I think Xpeng is a wave 1 and a wave 2. It's going to hold above 29, you know, really wide would be 22, and it's going to go on a wave 3 higher to 77 before a shallow wave 4 and a wave 5 higher. So some of the unicorns, right? Some of the 2020 unicorns, you know, maybe now we're in a unicorn environment. And I think we could see some evidence for that with all these kind of software stocks that are kind of exploding. Some of these kind of clean energy stocks that all of a sudden, you know, they're outperforming a little bit. If we look at Wayfair right now, it's a beautiful count. It's a beautiful piece of evidence for, you know, the Chinese growth stocks for the e-commerce sector. But what it really does is show, hey, if someone's trying to invest in growth, this is not for people who are afraid of being called bag holders. This is not for people who are afraid of being called wrong on the internet. And it's definitely not for people who are going to go all in because Wayfair has the highest upside potential. It's for people who know that position sizing based on high betas is the only way to play growth. That's me. This is a wave 1 and a wave 2, right? They scare you out. They scare you out before the explosion. And what are they doing right now? Back holder, back holder, back holder, right? The length of wave 1 places the wave 2 low says it's going to be worth it. We're going to go on a wave 3 higher to 445 before a shallow wave 4 and a wave 5 higher. This is a wave 1 and a wave 2, right? And so we're going to end this wave 2 at the 61.8 to 78.6% fib. We'll hold above 91, go the length of wave 1, places the wave 2 low on a wave 3 higher to 445. And believe it or not, as crazy as that sounds, that's a conservative wave 3 target. We'll have a shallow wave 4 that retests the wave 1 high, then the length of wave 1, places the wave 4 low. Can take Xpeng to Sillyville, right? To 700, right? That's a possibility. And it doesn't seem like a possibility right now, but high beta growth stocks, they don't really do kind of the rational thing, right? They have this great rally. They have this really scary correction. Then they have this great rally. Then they have this really scary correction. To me, this is a very clear count. 1, 2, 1, 2. Wayfair is going to enter wave 3 of wave 3. It's going to do it with Alibaba. It's going to do it with a lot of the Chinese growth stocks in the EV sector above 91. That's a nice level to say, hey, this is a wave 1 and a wave 2. We're going to go on a wave 3 higher to the 440s before a shallow wave 4 and a wave 5 higher. Here is Shopify. Shopify, right? We were talking about moats. We were talking about Kagers. This stock outperformed the market for 5 years, right? And it's easy to talk about moats and Kagers when it's outperforming. Why isn't anyone talking about moats and Kagers now, right? Didn't Shopify's multiples only get better, right? It kind of seems like some of that fundamental analysis is a little wishy-washy. Sorry, but shouldn't Shopify have even better multiples at this level, right? We're not going to write about that in our Substacks, but I think that this is a 1, 2, 3, 4, 5, a big wave 1. And now all of a sudden, Shopify is not the best stock in the world, but I think it might be one of the best opportunities at the 61.8% retracement. This is where a wave 2 can end on the all-time chart. The length of wave 1 places the wave 2 low says that this chart looks pretty damn similar to PayPal. It looks pretty damn similar to Square Cash. And then Square Cash just say they made a lot of money off Bitcoin. But anyway, the length of wave 1 places the wave 2 low says Shopify can go to 2,300 for a minimum wave 3 target before a shallow wave 4 and a wave 5 higher, right? We'll be talking about moats and Kagers then. We're not going to talk about them right now. For stops, I think that this wave 1 high on the smaller degree of 409 is pretty wide. 391 is a little wider than that, but I think both of them hold. The length of wave 1 places the wave 2 low says Shopify is a great piece of evidence for the entire e-commerce sector with Wayfair, with Amazon, with, yes, crypto, that this sector is going to do very well. We're in a unicorn environment right now, a unicorn environment that's very similar to March of 2020. And I think we could see some similar results, right? Speaking of unicorns, all of a sudden, Pounder being a defense stock isn't such a knock, right? And we have some of these cybersecurity stocks apparently doing well. You know, we're in a different environment. And I think that some of those losers in the growth sector, right, some of those Chinese stocks, some of those stocks that anyone who bought, they're chasing losers. That's what we said about oil 3 months ago, right? Anyone who's buying oil, they're chasing losers. I don't think they are. I think right now it can only be tight that Palantir holding above 8.90 says this is a wave 1 and a wave 2. And then wave 3, it's not going to stop at 45 if that happens. It's going to go way further than that before a shallow wave 4 and a wave 5 higher, right? A lot of partnerships with the government that don't really end for 7 more years, but investing takes time, and most traders, they're not in the market longer than 2. Exponential growth takes time as well, right? A lot of people said, hey, Palantir is going to take over the world, right? And then they forgot that, Microsoft and Apple and Google, right? They had these very scary dips before they did become what we call today Microsoft and Apple and Google. I think Palantir, if there's one to talk about, maybe Palantir, maybe Fastly, maybe some of these software stocks that have had these dramatic wave 2 corrections, if they hold these wave 1 IPO lows, they do have that potential that this is a wave 1 and a wave 2. 45 is a silly wave 3 target. It would realistically go a lot further than that before a shallow wave 4 and a wave 5 higher. So that's Palantir. I like it above 8. Datadog, I really want to include just because it's giving great evidence. Some of the best evidence that we get in the software sector is from Datadog and Cloudflare. I think this is a 1, 2, 3, 4, 5, a big wave 1 and an ABC wave 2 that ended at the 61.8% fib. So I think wave 2 is in. The length of wave 1 placed at the wave 2 low says the next target is 248 before a shallow wave 4 and a wave 5 higher. So I think some of these software stocks could all of a sudden become in vogue, right? A lot of them have a cybersecurity component. I know Datadog, I'm not sure if it's a cybersecurity stock, but if cybersecurity stocks are doing well, then that's going to be very good for the entire software sector. Similar to how Facebook doing well in the social media sector is going to be very good for the whole software sector. I think Datadog is a wave 1 and a wave 2. It's a leader in the software sector. It's also a 7-month rally. These are the exact same dates that AMD and Tesla make during this wave 1. I think they're all ending wave 2. And then this is going to be a wave 3 to 248 before a shallow wave 4 and a wave 5 higher. Here's Beyond Meat. We'll talk about Beyond Meat and Tattooed Chef. Beyond Meat has joined the list of stocks with, it's not a great list, but a couple of them I own. 3 of them I actually own. Ebon, Lordstown Motors, and Huya that go break the IPO low. Now, for Beyond Meat, it's not quite doomsday yet. The reason it's not quite doomsday is one, because Tattooed Chef still has a nice setup. But if we look at Beyond Meat, the listing candle for when it was originally listed was $25. So it hasn't broken that yet. The risk with recent IPO stocks like Palantir, for example, like Lordstown Motors, like Ebon, like Huya, is that they can break the IPO low and there's not that much chart history, right? So for a stock like, say, Boeing, right? If we look at the Boeing chart, we have years of data in play, right? If we look at Boeing, we have a lot of chart history where we're actually using, price action that happened 10 years ago as evidence in our analysis today, right? The fact that Boeing formed a 1, 2, 3, 4, 5 waves impulse and formed a massive wave 1, that's part of the analysis that supports the idea that this is a wave 1 and a wave 2. So we're entering wave 3 of wave 3 on the larger degree. So there's more chart history. There's more evidence from an LA wave perspective. Stocks that have recently IPO'd, they have a much higher risk and a higher reward. And a big reason for that is because there's not as much chart history. So Beyond Meat broke this low of 45. The listing low was 25. So I manage risk with growth with smaller position sizes, but I also think there's a chance that this is an A, B, C correction. And this is also, if we're talking about some data points, this is also very similar to what happened on January 7th. All of a sudden, Beyond Meat is getting a lot of options activity. It's in the top 200 implied volatility. It's in the top 200 volume and open interest with very cheap implied volatility. And then if you remember what happened in January, early January of 2021, Beyond Meat just went on a fever pitch rally after it started showing up on some of these screeners. Announced a partnership with PepsiCo, a partnership with, all these different companies. And it went from about 100 to 240 in like a week or something crazy like that. And this is from last night, right? Retail, all of a sudden, probably peak bearishness for Beyond Meat. But this is when the institutions, for the first time, and I've been looking at the screener every day for the past year and a half, for the first time, Beyond Meat is on the bar chart straddle and strangle screener. They're buying options on Beyond Meat. And something tells me that the smart money is not playing a move to the downside. I think the smart money would have been playing a move up here. I think the smart money is loading up options, and they're loading up option straddles because they know this could be that Wyckoff selling climax where everyone had that stop right here. Everyone had that stop right here. The listing low was 25. Realistically, that's too wide. Realistically, Beyond Meat's high beta can only be managed with position sizing. But if we look at Tattooed Chef, Beyond Meat has a twin sister, right? And PepsiCo doesn't think that fake meat is a fad, right? Neither does KFC, neither does McDonald's. I don't think that Beyond Meat is a fad, right? And there's only two fake meat stocks. There's Beyond Meat and there's Tattooed Chef, right? What if in the future there's 15 fake meat stocks? There's 20, you know? That's where some of these kind of comparisons come from. And I said before, we're in a unicorn environment fundamentally. Maybe now we're going to start seeing some of these unicorns from 2021 get some love. And I hate to say the word benefit, but let's just look at Tattooed Chef. Maybe it gives a little better level than anything on the Beyond Meat chart. This is the wave 1 and an ABC wave 2. So I think Tattooed Chef can hold above 9.79. That's a little tight, but if Tattooed Chef turns around, likely it would be with Beyond Meat. And then we would know, hey, this is wave 1 and wave 2. The institutions were doing something during this entire range. They were either accumulating Beyond Meat and Tattooed Chef, or they were distributing it. And most people are going to think now, because we're having this correction, that was distribution. I think that could be the selling climax. They're getting everyone stop. And then we're going to see that Beyond Meat and Tattooed Chef being a unicorn won't be a bad thing. They're going to be above these wave 1 highs, and we're going to know the institutions have been accumulating these two fake meat stocks for 2 years out of the IPO. So I'm not going all in Beyond Meat. I'm not going all in Tattooed Chef. I'm not going all in Chinese growth. But I do think that, you know, we're going to see the tune change around some of these growth stocks. I mean, didn't we just have yesterday that Square Cash went up, and they said it was because of all those revenues from Bitcoin? But anyway, we're starting to see some of the eCash stocks do well. We saw Etsy explode because they're raising their prices. I love when companies raise their prices. That means that demand's going up. But anyway, Bitcoin, 1, 2, 3, 4, 5, big wave 1 and wave 2. I think this is another wave 1 and another wave 2. So if we just zoom in, I think from this low, that's really the only way to trade it. If it's above 28.9K, this is a wave 1 and wave 2. The length of wave 1 places the wave 2 low, says 73K is a silly wave 3 target. Realistically, we go a lot further than that before a shallow wave 4 that retests the wave 1 high. Then the length of wave 1 places the wave 4 low can take Bitcoin to 109,000. And in my opinion, that would just complete a wave 3 within the cycle from this low. So that means that we consolidate for a while. You know, we probably have more scary corrections, but eventually Bitcoin would even go higher than that. This is wave 1 and wave 2. This is a large degree wave 3 in progress. This is wave 1 of wave 3 and wave 2 of wave 3. This is wave 3 of wave 3. And we're going to have wave 4, wave 3, and wave 5, wave 3. All in all, waves 1, 2, 3, 4, and 5 can take Bitcoin to 109,000 if it's above 28K. Very tight will be 33K. I think Ethereum supports the idea, and I think Marathon Patent Group supports that idea. If we look at right now, Ethereum, then I think this is a 1, 2, 3, 4, 5, a wave 1, and an ABC wave 2. I think this is probably the clearest impulse we get, where from this low, it's a 1, 2, 3, 4, 5 waves. This is an ABC correction. I can't tell my broker about 5 waves, but I do think that this is a wave 1 and a wave 2. We ended this scary wave 2 at the 78.6% fib. So if we're above 1700, the length of wave 1 placed at the wave 2 low says the wave 3 target is about 5.3K before a shallow wave 4 and a wave 5 higher. I don't think it would be the end if Ethereum got there, but that's the next target. The length of wave 1 placed at the wave 2 low. It says 5.3K, believe it or not, is a minimum wave 3 target. We'll have a shallow wave 4 that retests the wave 1 high. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed at the wave 4 low, Ethereum can go to 8,000. So we can see why they would get everyone out of Ethereum before then. So that's Ethereum. Here's Marathon Patent Group. Marathon Patent Group seeing some options activity with hut mining. And options activity on Marathon Patent Group was very useful predicting this explosion. It was very useful predicting some of these explosions. I think this is a 1, 2, 3, 4, 5 wave 1 and a wave 2. I think this is another wave 1 and an ABC wave 2, right? And it just so happens that we didn't get below this low. We didn't get below this low of 18. You would have thought we got below this low of 18 because of how, you know, bearish everyone got, but we didn't get below this low of 18 yet. So until we're below this low of 18, I think this is a wave 1 and a wave 2. We're going to go on wave 3 of wave 3 higher. The next target is 83. And talking about anything beyond that would be crazy. But I think like a lot of these growth stocks in 2021 getting rotated into for the past 2 or 3 months. Once we're above 83, beyond that won't be too crazy anymore.